A very good morning to one and all. This is Dr. Nabil Ahmed. I'm pleased to meet you in yet another presentation today. Our topic for today is the position of the real estate in UAE. This is one of the most hardly hit sectors due to the COVID. So, in today's presentation, we'll be looking at the issues related to the real estate market prior to COVID and due to COVID. So, we'll have a background of the real estate market. We'll look into the residential market and the office market separately, the current outlook of the real estate sector and certain impacts due to COVID and fall in prices and unemployment, and how this is going to impact COVID, the real estate sector due to the COVID again. The recent COVID pandemic has affected all economic across various sectors, and this webinar shall discuss the position of the real estate sector in the UAE. It will look upon the outlook of the sector before the pandemic and the impact created by the pandemic on the sector. So looking at the residential market, the residential sale prices in Abu Dhabi, the capital of UAE, fell on an average of 7.5% in Q4 2019, just prior to the COVID, while prices in Dubai fell by over 6% in the same period. And in 2020 Q1, the figures which are still waiting, prices have further declined. Dubai's residential market is showing very clear signs of recovery as we begin to see a sustained increase in transaction volumes. This is the story in 2019 compared to 18, where the initial data shows that the transaction volume in 19 had increased by 26%, and primarily due to it was a takeaway prices in the property market. So properties which is priced at a premium of 20 to 30% had been economically available in the secondary market in 2019, and that has been a reason for increase in sales transaction because people felt the prices were very attractive. And in 2020, over 8,500 units are to be expected to be delivered in the capital alone, while in Dubai, close to about 63,000 units are due for completion in 2020, which is going to increase the supply in already a demand impacted economy in real estate market. If you look at the current outlook, the average sales price for residential property has declined by approximately 7% between Q3 18 and Q3 19. With the fall in prices, also the rents get pulled down, but the rent had a harder hit where it fell down by close to 9% on an average price per square foot for apartments. Despite the continuing decline in prices, project handover in Dubai was continuing. It is estimated that a total of 18,500 to 19,000 units were handed over in the first 9 months of 2019, where in 2020 we're expecting threefolds of 65,000 units. But with the COVID, that numbers could significantly change, where certain developers might take this as an option to reduce the output or reduce the number of supplies to retain their price share in the market. If you look at the top seller or top 10 developers, Emaar, globally known but having its headquarters in UAE, semi-government owned, it's taken its first position with close to about 7,000 registered off-plan transactions, followed by Damac and other properties like Azizi, Dubai Properties, MAG, Seven Tides, Miras, Danube Properties, Al Mazaya Real Estate Development, and the First Group. If you look at the office market scenario, it has taken a further hit, and over the course of 2020, the trend is likely to continue, driven by softer market conditions, regulatory changes, and the work from home attitude. In Abu Dhabi, the rental rate is expected to decline to moderate. However, the market is likely to remain favored towards occupiers. As this trend comes from fruition, long-term commitments from corporate occupiers are expected, with average lease lengths likely shifted towards a 5-year mark with an excellent discount or a payment term. The short to medium term outlook for Dubai commercial market remains negative, with rents expected to continue to decline across all segments. If you see the current outlook, Dubai's office market experienced declining rents across the most established office districts in 2019 as consolidation and space optimization continued to drive occupiers' demand. And now in 2020 in Q1, we know what's happened. That's the work from home scheme which has been offered by many companies, and that's proving to be effective for them. So there also they can save a lot of floor space in office. So in response to this, landlords have continued to provide incentives to attract and retain tenants, including longer rent-free periods, shorter leases, etc. The most significant source of demand continues to be from firms looking to consolidate their operations. The primary sectors seeking office space have remained the construction and engineering firms, followed by technology and media companies. The current pipeline for office space is expected to place further pressure on rents, with many constructions ongoing and nearing completion for commercial office spaces in Dubai as well as in Abu Dhabi, which is to be handed over in 2020 Q3 and Q4. The workplace of the future is being defined by people and technology, thus impacting office space requirements and occupational needs. Historically, the primary users of office assets were corporates and companies of different sizes. However, the focus is now on individuals using the buildings. So, assets need to be adapted more effectively or converted to new flexible uses. The growth of remote working is a trend enabled by technology, as we have already discussed, and owners will need to forge closer ties with occupiers to collaborate and analyze what is working for the people who are using the building throughout the day, and they have to make such changes and bring out new ideas to ensure that the tenants can continue to occupy and work from office. Some of the examples for this includes free internet services, furnished offices, and so on. Now we're going to look into the impact that COVID has brought in. The outbreak of COVID is adding to the strain on Dubai's already weak real estate market, and UAE has been struggling with oversupply in most segments, but notably in residential and hotel sectors for about 3 years. Property markets are now hit by travel and other mobility restrictions imposed by government to contain the spread of the new virus, alongside low consumer and business sentiment. The S&P Global Rating acknowledged a high degree of uncertainty about the rate of spread and peak of the coronavirus outbreak. And as we speak, Moody's have given a negative outlook for the Dubai real estate sector yesterday, which is going to have a great impact on the real estate companies operating in UAE. Emaar has been downgraded from stable to negative, though their rating is still maintained at what it was prior to COVID, but with a negative impact, which means it's going to be more critical for everyone to have a look at the scenario and how the company is going to take up this hit by COVID. Another leading company in real estate, Damac Properties chairman, Mr. Hussein Sajwani, has also said yesterday that because of the oversupply in the market, the price is going to be further downtrending for the next 2 years. And a company like Damac, for its size, have started offering incentives, payment plans, discount terms, which it had never offered in the past, for ensuring that the existing inventories are cleared out from the books. From the investors' perspective also, if you see, they feel that this is probably the right time to take a good discount bet on properties if they were already in an idea of holding on to a property on their own instead of renting it out. Overall, if you look at UAE as a rent-to-own market, the rental returns varies close to about 6 to 9% on apartments to a smaller townhouses and villas, and in larger properties close to about 5 to 6%, which is also considered one of the highest in among the world's other countries. So looking at fall in price and unemployment, it is expected that the fall in residential prices will be steeper than we previously expected, with adverse trends lingering well into 2020, 2021 and further to 2022 as well. And if you understand that the Expo 2020, which was scheduled for October 2020 opening, has been shifted to October 2021. The current supply-demand imbalance in Dubai's real estate market has been worsened by the effect of the pandemic. This would lead to negative employment trends across some key sectors such as tourism and retail, as well as for certain small and mid-sized enterprises, which could weigh on demand for new properties. Although the severity of the impact on the Dubai real estate sector depends on the duration of the COVID outbreak and the extent of the government measure, it's clear there will be a downside considering the global scenario. This is mainly because of the UAE's reliance on travel and tourism activity, which provide thousands of jobs in the economy. So if you see, after the aircrafts and airlines have stopped working for the last 2 months, tourism has been on a complete block in the Middle East. And if you look at the hotel occupancy is primarily utilized by various hospitals for ensuring bed spaces available for the COVID patients. So this way, multiple activities are being taken care by the UAE government, and as it moves on. Thank you so much for viewing this presentation. I look forward to meeting you in yet another interesting presentation next week. Have a great day and stay safe.